you say you have three properties right now?
Yeah, 3 properties right now. We're actively looking. We got 1 under contract in Vail, Colorado, and 1 in Turks and Caicos.
Because I also heard that you said you had investors in these properties.
Yeah.
Now, forgive my naiveness, but is that enough income to sustain whatever lifestyle you have plus your investors' lifestyles, or is this just one investment strategy next to many?
Yeah, it's one next to many. And so there's other things that we still own that I've got teams that manage and run. I own a golf course that's, a very fun investment. And so that, we got people that are kind of managing this one. This is the latest venture in my long history of ventures that we're starting and seeing great success with, and that really.
Well, because we're at the boardroom event here off to the side. And in the boardroom, obviously, is an exclusive crowd, and it's an expensive crowd. Yeah. So that's why I was like, 3 properties, and no matter how valuable they are, it doesn't seem like that's enough to maybe be a part of the boardroom. But one sliver of a much bigger portfolio makes sense.
Much bigger portfolio. That's diversified out in a lot of things.
It's not like you just jumped into high $3 million plus short-term rentals.
No, we've been doing, I've been doing real estate investing for a long time.
Yeah.
And, we still own a lot of assets. This is just one that I've really found
fun.
Favor in, that it's fun, that it also makes a lot of money. I love putting deals together, working with great people to help them achieve their goals. There's a lot of people out there that have capital to deploy. They've done the traditional Roth IRA, 401k, mutual funds, stocks, bonds, equity side. They probably owned a rent house or 2. They probably invested in some syndicated deal, but they're looking for the next opportunity. And we're seeing a lot of success with people saying, yeah, I want to do that, but so does my spouse.
Well, the multifamily thing, I think the last 10 years, at least in the education circuit, it seemed like it got more and more and more popular, which means it got more and more competitive, which means now people are getting kicked in the teeth.
Cap rates are compressed. A lot of people are doing it. 99.9%, I'd even bet 100% are all debt financed with some sort.
Yeah.
And as debt changes, because it's all going to be on short-term debt, whether it's a 5, 7-year, 10-year lock, there might be some rate buy-down opportunities. All the things that go into that, it's still debt that, as more and more people are doing it, you can compress that cap rate enough where the rent doesn't keep up, and now you're having that dreaded capital call.
It's that leverage is a beautiful thing until it's not.
Until it's not. And no one ever underwrites for that, or no one ever talks about that when they're out there pitching their deal. Right. They never talk about the downside. What happens if? And we talk about it all the time in our deal. What happens if? Let's talk about the downside.
Well, if you have enough partners, if you have a house in Costa Rica, it's like, well, I guess I'm visiting once a week or once a month or whatever.
We're going more,
Yeah.
And, with no debt, the downside is very minimal. The downside is taxes and utilities.
So with this current venture, do you want to get 3, 5, 10, 100 of these things? What's the goal?
Yeah.
Or is it more of a lifestyle? Hey, I need a house in Paris just because I want to go to Paris more.
No, there is a method to the madness. So we're raising $15 million. We're a little over halfway there. With the idea that we'll hold the properties for 10 years. We're going to have about 5 to 6 houses total. So about $3 million a piece. That's how we get to the $15 million. And then we pay dividends all along the way back to our investors. And then in the end of 10 years, we sell it, give the investors back, hopefully all their money plus proceeds.
Plus the appreciation of the houses themselves. Because when they're buying the real estate, but they're also buying the business itself.
That's right. Yeah. So we'll sell it more than likely on a cap rate model, because we can say, here's how much that house in that area generated. And we're building it with the end in mind. That end in mind is for a private equity group that's out there. There's big companies that do this. Marriott, AMEX is starting to get into the space where they're buying high-end luxury homes. So our goal is to build this up and flip it to one of them at a heavy multiple.
What type of multiple is this type of business usually go for?
4 to 5x.
Okay. Of the EBITDA?
Or EBITDA.
Okay.
Yeah.
Oh. Yeah, because it's one of the things I was looking at. We don't know each other very well, but it was in real estate, now I'm in media.
Yeah.
But I'm in the SMU Executive MBA program right now. I'm also in the Goldman Sachs 10,000 Small Business program right now. So I'm in this heavy information or gathering, how to be a better business guy, how to be, basically I'm trying to be smarter. I'm trying to, leapfrog the process, but having good financials has never been a strong suit for me.
Yeah.
But I've always looked at financials as a tax thing, not necessarily a cap raise or a lending thing.
Yeah.
And now I'm like, oh,
That's why that makes sense.
that's why I knew that.
Yeah.
But even like, understanding the multiples, like, okay, I need to raise capital. Okay, what's my type of company? What multiple is it?
Yeah.
And it's like, well, it's 3 to 4x of EBITDA. Okay, well, technically we don't have EBITDA, so what is it? Okay, well, it's 10 to 12% or 10 to, in my business, it could be 10 to 12 of revenue.
Yeah.
And I'm like, all right, well, anyway, it's just playing that game and that shell game, but ultimately it's what is it worth? Well, what is someone going to pay?
What is someone going to pay? I mean, at the end of the day,
Yeah.
that's the thing. And so, yeah, I mean, we look at it, we are keeping that thought process in mind. And then our fallout, our backup plan is always, well, we can just sell it to a very rich person that wants a house in that area.
Yeah. Also, I think I said my numbers wrong. I think it's 3 to 4 in my industry. It's 3 to 5 of revenue, and 10 to 12 on EBITDA.
Okay.
So
yeah.
Just not that anybody cares. No one's
gonna check.
No one's gonna fact check me.
Yeah.
It's not the internet or anything like that.
I mean, it's at the end of the day, I look at it again. How are you making that memory? How are you having fun, enjoying what you do?
Yeah.
And no matter what level of real estate that you're in, if you're enjoying what you're doing and it's working out for you, man, stay in it.